This video is for federal employees who want to understand the ins and outs of FEGLI. So I'm gonna call this the ABCs of FEGLI. Let me let you know exactly how it works. And the FEGLI, again, is your federal employee group life insurance. So when it comes to the FEGLI, it's broken down like this. You have your basic coverage. So if you have your basic, what that means is you have your salary rounded up to the next thousand. Say your salary is $100,001, then it rounds it up to the next thousand. So that makes it 101 plus 2. That basic option, what happens is when you go to retire, you have 3 different options on what you could do when you retire. You could either keep it at the full retirement amount, which is 100% no reduction, or you could do the 50% reduction, or you could do the 75% reduction. Now, the 75% reduction is free. But going back to our example, if you have $100,000 in coverage, you now have $25,000 in coverage. Not a lot of coverage. Most people don't want that much coverage. They want to still have more, right? But I just wanted to give you the basics on how the basic life insurance works when you go to retire. Now, you also have the ability to have option A, right? So if you're looking at your pay stub and you see that option A on there, what that means is you have a $10,000 policy, right? $10,000 in addition to what the basic coverage is. And so this is just the old original federal employee policy. It was grandfathered in. That means you would have the $103,000 in coverage from the basic, plus the $10,000 coverage from option A. So you have $113,000. What we're gonna talk about next is option B. Now that's the one, that's the big kahuna when it comes to your federal employee group life insurance, right? Because option B allows you to get up to 5 multiples of your salary, right? And this is what most people want, right? If you have kids, if you're married, you have a mortgage, you want to leave your kids money, if you want to pay for your kids' college, if you weren't around anymore, like, this is what you want. When it comes to the 5 times your salary, again, you could take up to 5 times. So you could do 1 times, which would be your basic plus another year's of salary, times, you could do 2, 3, 4, or 5 times, right? Now, here's the thing with option B. The cost of option B goes up every 5 years. And the thing is, every increase, it increased more and more by percentage points. Before you turn 50, the FEGLI doesn't cost that much, if I'm being honest, right? But most life insurance doesn't cost that much before you turn 50. But once you reach that 50, 55, 60, the cost goes up significantly. You know, I've run into people that are in their 60s and making $150,000 plus. But once they turn 60, they're paying $300 a pay period. That's a lot of money, especially when you could have locked your costs in a lot earlier. So if you're a federal employee, you have 5 times your salary, you want to look at some supplemental policies because you don't want to have that significant increase. Option C is the family plan. So with C, how it works is it has 2 different options. I mean, you can get both, right? And so the one is the spousal option, right? And the spousal option also works in a 5 multiple system, just like the option B. But how that works is like this. You can get 1, 2, 3, 4, or 5 times, but it's a multiple of $5,000, right? So you can get 5,000 multiplied by 1, that's 5,000, obviously. 5,000 multiplied by 2, that's 10,000, and so on and so on. And the maximum is $25,000, right? So for your spouse, you can get coverage of $25,000 without them having to take any medical exam. That's pretty good. The thing is, a lot of people want more coverage than that, and you can get more coverage than that, but that's how the family plan works, right? And then you have the children. And this one, listen clearly on this, right? Because this is a mistake that a lot of people make. With the children, it doesn't matter how many children you have. You can get coverage on them, and it works in a multiple system as well. But this time, the multiple is of 2,500. So 1 multiple is 2,500, 2 multiples, 5,000. It goes all the way up to 12,500. Now, for one price, all of your kids are covered. However, here's where most people mess up. Once your child turns 22 years old, they're no longer covered, right? Like, say you have 3 children, all 3 of them are now above the age of 22. You're still gonna pay for the policy. You have to notify your personnel department, OPM, that your option C is no longer covering anybody. And so just to recap, you have your basic, you have your option A, you have your option B, you have your option C. When you retire, the basic coverage is gonna increase tremendously, right? And if you wanna know your exact numbers, just go to opm.gov, type in the FEGLI calculator, and you can run your numbers. But I'm just gonna give you some hypothetical numbers. Let's say you're working. The basic coverage isn't gonna cost you more than $20, $30 maximum while you're working. But if you choose the no reduction, that $20, $30 can shoot up as high as $350, $400 for the no reduction, right? So, and again, all the basic is covering is your salary plus the $3,000, right? And so again, what most people do is they get a supplemental policy because the cost is significantly less. And what we tell people to do, the money you're saving, throw it into the TSP so you have more long-term wealth and options for your children. Here's another thing. When it comes to life insurance, as the insurance industry grows and matures, they are doing more things to give back to you, right? And so one of the things is this new concept of living benefits. And what it does is it allows you to take money from your policy if you have critical illness, chronic illness, or terminal illness. With the FEGLI, you don't have that option. Only thing you have with the FEGLI is the accidental death and dismemberment rider, which is if you get into a car accident, murder, lose a limb, things like that, you get extra money, but it's not something that you can use for just normal occurrences when it comes to health. So that's how your FEGLI works. If you have any questions, feel free to drop a comment. My team, myself, will answer the comment. Also, if you want more content like this, subscribe using the button below. We'll keep this type of content coming because our goal is to help you retire on time and with confidence.